Good afternoon, traders, and welcome to today's Traders Q&A. First of all, I'd like to start off by thanking you all for sending in your questions. It's much appreciated, and as we said in the email, really we want you to be able to get to where you want to be, and we want to do everything in our power to make sure that that's possible. So obviously, I know that you can send in your questions via email and we can answer via email, but we find that a lot of the questions are kind of quite similar in nature, and also I find that being able to explain it over a video might be a lot better than doing it via text form. So we'll see how this goes, and if you guys find it useful, then it'll be something that we kind of do more and more often. Okay, so what I've done is I've put all of the questions, the emails into an inbox, and I'll basically just go through them one by one, read them out to you, and then answer the question. So the first one, hello, I would like to know how to use a Facebook group. Is there a certain time to put information out or to find some trades? Okay, so basically the Facebook group is a community of traders. It's all of the traders that trade the day trading system. There's no set schedule for the Facebook group. It's just basically everybody interacting amongst each other. That people will be putting out trades when they're looking at them, or maybe after they've taken the trades, they'll kind of be putting out some reviews and stuff like that. And really, you can use it in whatever way you want. So there's not a schedule as such. There isn't going to be a certain time to put out information. It's just as and when you want, and use it the way that you find most useful. Okay. So the question in this one here is, what happens after we graduate from the academy? Is there a path that we can take to further our trading careers to a higher level? So once you've graduated the academy, once you've finished the course and gone through all of the videos, really the best thing that you can do is get lots and lots of practice in. Okay, because what we've shown you in this day trading academy, as far as day trading is concerned, they're the strategies that I use every single day in, day out. They're the strategies that I use, and they're very effective, okay? But what you need from a day trading perspective is screen time and practice. And really, there isn't going to be another course as such. You're not finding other strategies isn't going to be something that helps you. It's more just a case of just screen time, doing things over and over again, and really getting used to seeing what the trades look like at the hard right edge of the screen, at the heat of battle. So, when you're in the markets, it's a lot harder to pick out trades than when you're looking at them at the end of the day. So, and it's only through screen time you're going to get that. More strategies aren't going to help you. More education at that point isn't going to help you. There's got to be a moment in time when you say, okay, I kind of know the technical part of this, and now I need to go and put it into action. So I hope that answers that question. How many day trades would you be running at any one time, and what to do at the end of the daily session if you have an active trade running nicely into profit with all signs of it going even better tomorrow? All right, so I'll answer the first question. How many day trades do you have running at any one time? If I'm focusing on just the DAX, typically I'm only going to have one day trade in one instrument going on at one time. But that's not to say that I wouldn't be looking at other Forex pairs, for example, and have some day trades going on with them at the same time. So I wouldn't say, if you're one instrument, I would say one trade at a time, mainly. Sometimes you might be in a trade, and then you might find another opportunity to add to that trade, and that's fine too. But most of the time, just one trade at a time. If you're looking at other instruments as well, what I would say is that I wouldn't define it by 2, 3, or 4, a number of trades, but I'd define it by a percentage. So you could say, I like all 4 of these trades, but you might want to risk a maximum of 2%. So you'd have to have 0.5% risk on each of the trades. You wouldn't have 1% on each trade, and that's the way that I would do that. What to do at the end of the session if you still have an active trade running? So if you're day trading, I would really pretty much say sort of take the profit. Okay, if you don't have a longer term view, if you didn't get into it, from a long-term trading perspective, then trying to turn a day trade into a swing trade, it might work sometimes, which is great, but I think that it would cause you to create bad habits. So whilst you'll start by doing it when the trade is making money, then it will slowly creep into your trading where you say, well, I'm not out of the money at the moment. I might give it till tomorrow. Let me move my stop loss a bit further away, and turn this day trade into a swing trade. And then that's when kind of all hell starts to break loose and you start to make more mistakes. So I would say if you're looking at it from a day trading perspective, you got into it from a day trading perspective, keep it as that. Don't kind of try and change it and turn it into a longer term trade. I've completed all of the video. What's next? Also, when does the free trial last? And what are the best indicators, parameters, etc.? All right. So first of all, the completed videos, if you've just sort of signed up, which you will have done in the last week, we split it up into two sections. So the first of all, you get the sort of like the foundations, and we did that on purpose because what we get far too often is we get people that buy a course and go straight to the strategy sections, and they don't bother spending any time with the foundations, which I think is kind of quite important. And even if you think you know some of the stuff, we might have a different perspective on things, and that perspective will kind of mold the way that we trade our particular trading system. So we sort of split it up to say, actually, you have to go through the foundations first of all. You have to understand them. And once you understand them, then you'll get access to the strategies. So the short answer is, you've completed some of the videos, but there are more to come. All right. And then that will kind of answer the next question, which is what indicators and things will you be using? And that's all going to be revealed in the strategy section, which basically comes 10 days after you've registered for your account. So once you registered on the members portal, you'll get 10 days to go through the foundation stuff. And then after that, the other videos will become available for you. And then also, when does the free trial last? So the trial lasts until the 12th of September. Okay, after the 12th of September, that's the end of the trial. So it's not like a 30-day trial or anything like that. It's until the 12th of September. And the reason that we've done that is we've got some really, really cool stuff coming after the 12th of September in terms of sort of like the live trading sessions and things like that. And we want that to be available, only to those people that are serious about the question about the course and the strategy. I've learned that applying support and resistance to a day chart gives a much wider perspective of price action over a longer time frame. It helps to map out and identify several support and resistance points as compared to applying the rule to a shorter time frame, which shows only fewer levels of support and resistance and thus fails to disclose a bigger picture. So you're absolutely right. I don't think that was necessarily a question, maybe more of a statement, but I'll confirm that for you. So the longer term support and resistance levels definitely are more important ones. And they'll give you sort of like a better, bigger overall context on what you're trading, where you're trading to, and all of that kind of good stuff. The one thing that I will say though is that don't discount the shorter term levels. You can look at a 5-minute chart or a 60-minute chart, and you can pick out intraday levels, which will give you shorter term reactions to the levels ultimately, and it will give you sort of like short, sharp trading opportunities. So they won't be as strong as the longer term levels, but you shouldn't discount them altogether. I still use them very much for my trading. Is there a question in here? I note that minor support and resistance levels are only visible on the 5-minute charts or 7-pip range charts. Also seem to be important for this approach. The rules seem to work okay for trading when there's a trend, but I haven't yet figured out the best triggers for selling highs and buying lows. I can see what to do and when, but because of my potentially emotional nature, I must have firm rules to work with. Perhaps you'd like to comment on that or an approach when the market is consolidating. Okay, so the question ultimately is, this gentleman knows what to do when the market's trending, but he wants to know what to do in a range-bound market. So what I would do in a range-bound market is, first of all, I would define the range from a longer-term time frame. I wouldn't do it on like a 2-pip chart or a 4-pip chart or something like that. I'd do it either on, let's say, a 5-minute chart, so time-based charts, or go out to, let's say, the 10 range chart or the 14 range chart and define my range like that. Once I've then got a range, I've got extremes to the range. Okay, so you've got your low and you've got your high. And what I would then do is I'd use the shorter term time frames as triggers to get into the trade. So I'd use those and look for, and this strategy is coming up, so you'll see this soon. I'd use something like the flow trading and the line charts to get reversals to the levels. And I'd be looking for sort of like 1, 2, 3 reversal patterns at the range extremes, as opposed to it just kind of going through and then coming back again. So then by using longer term charts for your extremes, but shorter term charts for your trade, you can see the price action and the reaction to those levels when the price gets there. So that's how I would play that. Okay, I always watch the Forex Focus videos each week, and I have a question about that. Nikki often uses the 1 and the 4-hour chart to help him find an entry point on the longer term trade. Once he's in a trade, he then goes back to the daily chart to manage it. For example, I'm long the euro dollar at the moment, but on the 1 and 4-hour chart, I can see I want to root formed. So I thought I should get out. Then on the daily chart, things look different, and so it's tough to know what to do. So what would you guys do? Ignore the shorter term moves or get out to limit losses? Now, this really depends on your overall perspective and your overall sort of analysis on the trade. So when I'm doing the Forex focuses, I do look at the daily charts for the overall direction. If I'm taking trades off of the 1 hour and the 4-hour chart, if I'm taking it against the sort of the daily trend, then I'll be much more eager to get out on a reversal like you're talking about. However, if I'm going with the daily trend, then I will give the trade a little bit more room to breathe. So if the market goes against me a little bit, I might even add to it once it's gone, significant, well, I say significantly, not towards where my stop would be, but once it's gone quite a bit against me, I would then look to add to the position, because I would kind of reason with myself that the longer term is still to the downside. That's why I've given it more room to breathe, because I think that after all of the market fluctuations, ultimately, if I'm in line with the longer term trend, more often than not, the trade will go into profit at some point in time. That's not to say that you've got to be stupid with your risk or anything like that, but it's just saying that you need to understand what it is you're trading and in which direction you're trading. So the short answer is, if you're trading with the longer term trend, give it more room to breathe. I personally would. If you're trading against the longer term trend, then I'll be a lot more aggressive with my stops and with it going against me, because ultimately I'd be looking to get involved in the trade in the direction of the longer term trend anyway. The second question is about platforms. In one of the videos, you say that the platform of choice is a personal thing, but could you tell me why you choose NinjaTrader for your day trading? Is it more reliable than MT4? You've seen that MT4 sometimes suffers missing data, especially when there are big market moves, etc., etc. So basically, this is a question about platforms and why do I use NinjaTrader? Well, first of all, a word about MetaTrader. It's not the worst platform in the world, but I personally, I don't like it as much. I find that it's not intuitive. Well, it is intuitive. That's a wrong word. I find that it's not as flexible as something like NinjaTrader. Okay, so MT4, as long as you're kind of using what the indicators and stuff that it provides you, it's a fantastic platform. But as soon as you want to start thinking outside of the box, as soon as you want to start doing things like, I can switch between different workspaces with shortcut keys, I can, there are many more different types of charts and things that you can use with NinjaTrader. You have a dedicated data provider rather than just the broker. So I kind of think that MetaTrader is okay to an extent, and I realize a lot of you use it and a lot of brokers provide it, and that's absolutely fine. I just prefer the flexibility that NinjaTrader provides me, because I'm using one particular. I use Kinetic as a data provider, but there are others that you can use there, and there's more flexibility with the way that you can kind of have watch lists for your charts. The way you can flick between the different workspaces with shortcut keys as opposed to having to use a mouse and all of that kind of stuff. I prefer NinjaTrader for that reason there. So I find it just more flexibility, I guess, if we sort of round it up into one sentence there. Okay, moving on. So this gentleman here has a few questions. What would be the minimum account size that you would recommend for trading the day trading system? It really depends on who your broker is. So you've got some brokers that will let you trade for as little as like a penny a pip or 10 pence a pip, in which case you could have an account with as little as, let's say, £100 in it, and you could still trade. But I guess it's all relative. It's how much money do you want to be able to make, how much is going to make a difference to you. So if you're trading with like £100 account, you're not going to be making more than, let's say, 10, 20 pounds a week, even if you're using a little bit bigger risk parameters with the £100 account. And if that 10, 20 pounds a week doesn't really do much for you, then I guess you'll probably want to use more. But if you're just you're starting out, you're testing things out, you can find brokers where you can literally put £100 into an account. You can stay within, decent risk sort of parameters, because we are in and out many times in a day. We do have stop losses that are much closer to the market, so that also helps too. So answer to the question, what's the minimum account size? You could do it with a £100 account. What broker do you use and why? So I use a couple of brokers. I've used the IG Index for a long time because they provide every market in the world. Everything that you could possibly want is provided with them. Their spreads aren't as great though, so that's the one thing that you have to contend with. I use FXCM. I have an account with them as well, and also we've just established a relationship with a company called FX Primus. And if you don't run along and sign up for them right now, because we're in the process of, we've got preferential spreads for the Day Trading Academy traders. So if you go and sign up now, you'll get some not so great spreads. But if you give us about a week, I will send out a link to everybody where you will get spreads of like half a pip for the euro, half a pip for the yen. The DAX will be a point. So very, very low spreads across the board. So give us a week there and I'll send out a link for you on that. What instrument would you recommend getting to know intimately? The DAX. It's the most volatile instrument, and it's one that I've made a lot of money on. So the DAX, absolutely. What time of day do you day trade and why? I typically day trade between 8 and 10 in the morning, and I do that because that tends to be the most volatile time for the DAX. So the markets move a lot then. I get plenty of opportunities in that time, and I can kind of be wrapped up and do other things for the rest of the day. I find picking the entry one of the most difficult parts of trading. Will you show us various entries strategies? Absolutely. So that's coming up, as I mentioned earlier in the video. That is coming up, so do not worry. The strategies are coming. You're going to absolutely love them. Okay. Whoa, lots of questions here. Jim Bradley, I'm enjoying the videos and I feel that it's cementing my knowledge. Not sure how I'll hold up in the heat of battle, but will prepare myself when I feel I'm ready. One thing I'd like clarification on is when you talk about a move with momentum, am I right to interpret this meaning as a move through a support or resistance area where the candles are mostly solid with small wicks, ideally then waiting for a pullback towards the support and resistance levels? Are there any clues to identifying false breakouts? This is clearly easy if you've already marked up the support and resistance levels beforehand on the higher time frame, so I'll be looking to prepare my charts with the support and resistance areas at hourly timeframes and looking for momentum moves on the 5 and 15-minute chart. So first of all, Jim, I'm going to cover this in the strategies. So you will be seeing this soon anyway. But just to answer your question so that we don't leave any question unanswered. So in terms of a momentum move, we are looking for big body candles. We're using range charts as well, so you want to see that they move through quite quickly as well. So sometimes with a range chart, that's the one drawback. You can't necessarily see the time, and time does have an important role to play in it in terms of momentum. So you want to see the market moving in one direction in a short period of time, rather than kind of grinding up there slowly but surely. Moving through a support or resistance levels that you've defined is an even better indication as well. So absolutely, everything that you've said there is correct, but we'll go into it a lot more when you get access to the strategy module. So what I would say there is give it a second. Once you've got access to the strategy modules, take a look through them. If you find that you've still got questions, then kind of drop me another email. And I'll maybe do another video where I kind of show momentum on a chart and stuff like that, rather than sort of trying to describe it to you. I guess that's the one drawback of talking to the camera here. I'm not sure I'd be able to do that adequately enough, but you're pretty much bang on there. Okay, hope this time I can follow you, Nikki, and for your long period of time, and it will be a success journey. I got all the theory, the questions you answered at the bottom of the page. When will the strategies? Okay, so the question here is, when will the strategies become available? I answered that earlier on, so we will move on from that. The next one, most of my questions should be around this department. On the technical modules, I do have one question. On the support and resistance module, you mentioned that price can do one of two things at these levels. Reverse, in which case we look to play the reversal, or breakouts with huge momentum and we deploy breakout strategies. My question is, when price sits at these levels without breaking out or reversing, how do you approach such a scenario? And that reminds me, I forgot in the previous question to answer the question about how do you avoid false breakouts. So I'll do both of those here. So once, if the price kind of approaches the support or resistance levels and meanders at that level, then that kind of, it messes up the chart a little bit, and then when the market breaks out in either direction, it makes it more difficult to trade. However, if the market does sort of meander at a level and sort of move sideways, so to speak, then what you'll find is it actually also does make a sort of like a consolidation range. So what I would do there is I'd bracket that range, and I would either take a break above the range or below the range, but I wouldn't do anything within that range, okay? In terms of how do we avoid false breakouts, there isn't really a way to do that. You are going to be getting involved in false breakouts. It's just the nature of trading. The one thing that you can do, to be honest with you, is sort of what this gentleman is looking at, what he's observed here when he's asking this question. That is, look at the way price is approaching a level. If it is kind of moving slowly up towards a level of no real direction, no real conviction, then it's probably going to be a false breakout. Okay, so the price action preceding the break can tell you a lot about whether it's going to be successful or not. Okay, a few more questions to get by. I think I can have a new bit quiet. I don't think there's a question in here. My question is, if you can only trade between 8 and 10 p.m., can you suggest ways to adapt this system? Okay. If you can only trade between 8 and 10 p.m., there's a couple of things. And this gentleman then goes on to say, would you use it with a Forex pair or something like that? If you can only trade, I would say, first of all, be cautious about trading the Forex pair after 9 o'clock. That's kind of like a dead hour, the dead zone, that nothing really happens at that time. So I wouldn't be trading FX pairs or day trading them anyway between 9 and 10 o'clock. You could potentially, what you could do is look at trading the last hour of the New York session. So maybe pick the NASDAQ, for example, which is an index that I traded quite actively for a long period of time. In fact, that's where this strategy right here, the sniper strategy that you'll be learning soon, that's where that all started. That was observing the price action on the NASDAQ, and I kind of designed that system for that. So if you can only trade from 8 till 10, I'd say scrap the 9 till 10 part because sod all happens then. But just focus on the closing hour, so the last hour, 8 till 9, and trade some of the US indices. That would be my sort of recommendation, or even something like oil. Now that, okay, this isn't a question about day trading, but Steve, I'm going to answer this anyway. So Steve is a Tottenham fan, and he likes winding me up about Arsenal. He said, now that it's a new season, have you at last decided to start supporting the emerging market in North London instead of the has-beens? First of all, you guys have been doing really well this season. I know that we've had an atrocious start, with 1 draw, 1 win after today. How did you guys do? I think it was 1-1, right? So you're only a point above us. So let's just kind of relax with this emerging market, and let's talk about this. I'll come back to you at Christmas time, but I think we still finished above you last season, right? So, so thank you very much for that email. I'm going to stick with the has-beens for just a little bit, but we'll pick up this conversation again in December, and we'll see where we go from there. Okay, so that wraps up this trader Q&A. I hope you enjoyed it. I hope you got a lot of value out of it, and you kind of Like I said, it kind of takes you on to the next level. We'll do more of these if you enjoy them, so please feel free to post a comment. Just let us know what you thought about it. If you've got any other questions you'd like us to include in a later one, let us know. My brother and I want all of you to be, super successful, and we're completely willing to do whatever it is that we can to make that a reality. But obviously you have to use us to be able to make that happen. So, and also use all of the things that we provided for you. So like the Facebook group as well. That's a great tool for all of you, because there are other traders there that are doing well. They're posting their trades, their thoughts on the market and all of that. Just get involved in that Facebook community, because it is a great one. And you will all find that you'll be more successful the more active that you are. And like I said, finally, use us, drop us an email. We'll do more of these. Anyway, that's enough of me talking. I think that's probably more than half an hour now. You've had to put up with my voice, so apologies for that. I hope you enjoyed it, and until next time, good trading, and have a great weekend. It's bank holiday weekend now, so have a lovely end to your week and a great bank holiday weekend. Take care.